dollar has been on a tear, climbing against a basket of major currencies. My next guest thinks there are even more gains ahead in the near term, especially as we head toward Election Day. But what about longer term? That could be a different story. Joining us now is Tom Fitzpatrick, Managing Director of Global Market Insights at R.J. O'Brien. Tom, welcome to you. What's going on short term with the dollar here?
Hi, Kelly, and thanks for having me again. I think in the short term, we have a very different picture to when we were speaking in August. In that environment, we were seeing a very dovish Fed. We were seeing a very cautious ECB. We were seeing a very hawkish Bank of Japan. And as a consequence, we were seeing a move in the yield differential very much against the dollar. And as a consequence, we saw significant dollar weakness, and it continued all the way into the end of September. But since then, the picture has changed quite dramatically. Even with the 50 basis points that the Fed gave us, similar to what we saw in 2007, they turned much more cautious. They questioned the continuation of an aggressive move. In fact, they're not even guaranteeing that they're going to continue to cut, while the Bank of Japan has become much more cautious. And the ECB has become increasingly dovish. And at the ECB, they're now talking about 50 basis point moves as a potential. And as a consequence, from the end of September, we've seen a sharp reversal in terms of those yield spreads, moving dramatically back in favor of the dollar. And as a consequence, having had about a 12% drop in dollar yen and a 5% drop in the euro, we've now seen them come back quite strongly. And there is a danger in the short term it could continue further. Number one, because we're pushing against and possibly breaking above some very good levels in terms of US yields that might suggest we go even higher still in the near term and widen those spreads out. And of course, number two, we have the election. And certainly at the long end of the curve, there's a view that there's a little bit of what people refer to as the Trump trade going on. And if that is the case, we could also continue to see a push on those longer end yields. And that seems likely, at least in the near term, to be continued to be supportive of the dollar.
So, Tom, boil it down to me into one trade or maybe a couple of trades that you'd put on right now.
I think dollar yen is the obvious one, only because it's always been the trade that is most risk sensitive, and it's always been the trade that has been very yield sensitive. The risk environment going into this election is trading very differently to the last two. Equities are actually trading up into this election. The geopolitical risks have dropped somewhat. Oil prices have dropped, which takes away a little bit of concerns in terms of an economic lag or an economic feedback lag. And therefore, as a consequence of a positive yield environment in a positive risk environment going in here with a Bank of Japan and a political structure as well over the weekend that has taken a little bit of a turn in terms of the LDP losing its majority, the most obvious trade that seems to benefit from the backdrop and potentially another push higher in US yields is possibly dollar yen. We've already broken above some good levels. There's not really an awful lot between here and 157. Maybe even a move to 162.
Maybe even a move towards 162, and you see the euro weakening as well here, maybe even towards the 103.50 range. Possibly we could get to that point. I remember those articles we all wrote about euro parity. That was 15 years ago. So interesting to see these levels come back into play. Again, for now, Tom, we'll check back in after the election, maybe see where we stand. But you see this run continuing with the strong dollar. Thanks for your time. We appreciate it.